when it's cold outside on a cloudy day. Cue that wind effect. What y'all thought this was? Bring it in, bring it in, bring it in, bring it in. Let's get down to it. All right, come on, guys. Listen, again, not a momentous day. It wasn't a great day in general for the stock market, but obviously for our highly manipulated, highly synthetically shorted play, AMC. But like I said, we got some keynotes, so we're going to tap in on that and like some correlations that I want to bring up to everybody can clearly see the blatant manipulation. Like, it's almost insane that we're getting the information basically showing, oh yeah, they're just frauding it up right now to hold it below 6. I mean, this is absurd. But don't expect that C to come. That's not going to happen. But here we are in our own battle. But guys, before we tap into that, guys, I've got a video from Fox, basically one talking about the current state of affairs of the market, and two, Warren Buffett's call to where he sold all his other bank stocks and has picked up Capital One. Just as a reverb, what we were talking about last time, I was like, this banking thing ain't ended. There's no cover up for this. They've got to feel this pressure that's coming in. But nonetheless, the time is now, right? This is the greatest generational wealth transfer of all time, in my personal opinion. Like, I haven't been alive all the time, but I can just go based off of the data, based off of what's coming, what's arising. Guys, don't miss out on this opportunity. You can play yourself being caught up in one simple thing, but this is the retail saga. This is about retail. This isn't just about AMC. This is about the grand scheme of things. And if you hold AMC, but you haven't picked you up some of the XRP, and again, not financial advice, all I can do is try to help you. If you can't see, you understand. But like I said, don't hate on me with my yacht and my cup of thighs. You hear me? All I'm telling you is this. Now it's time for XRP. Go in the description, get your discounts on your Ledger Nano X, get your discounts on your Ballot wallet. Start with the ballot. It's 35 bucks. That's a simple move to play. But simply, XRP, HBAR, XLM, Bitcoin, Ethereum, over to our stock sector, Tesla. I've been saying it every single day. Go look through every single video. Tesla, NVIDIA, who am I? Microsoft, right? Who are VTII. Get you some of that rumble in there if you want to have your little swing growth stock. Now, that's just my personal opinion, but I see rumble slowly becoming more of a massive thing, especially with the cancer culture that we have. And like I said, I'm not saying what's right or what's wrong, but I do know that you should be able to voice your opinion how it may come, right? And being it pushing one thing down and then putting certain people on beer cans, it doesn't make sense to me. But that's nonetheless here nor there. But like I said, they're tapping in, talking about these beautiful stocks, which I say have high pricing power, that you need to be collecting. This should be in your long-term portfolio. And then you have your momentum trade. My momentum trade account, my Weeble, that thing, I open that bad boy up from 4 o'clock going through all the way through 3 p.m. I'm just in this thing. Oh, whoa, whoa. Well, I mean, but I can always open back up that long term and be dollar cost average and looking at that thing grow. And you need to have that. If you're not, as an investor, and of course, everybody, you got to learn your lesson. So I can't make you get it. You got to go and you got to lose some money in this market before you kind of get, okay, wait, I got to have leverage. One, you don't need that much money in your momentum plays because you can make a lot of money off this with a small amount. You need the security in your long terms and then companies of the future. If you don't understand AI, if you aren't seeing how much that's popping up, I can't help you. If you aren't seeing EV, how much that's popping up, I can't help you, all right? If you aren't watching the tech era come alive, I can't help you with that, right? But nonetheless, let's tap into that, guys, and let's get down our keynotes from our AMC. Guys, hold it up, and let's get down to it.
Should investors simply forge ahead through the DC drama and go and very specifically pick out some names? Well, that's what our floor show traders are here for. Teddy Weisberg and John Najarian. John, let me start with you first.
Man, look like Rip
keeps
Van
saying
Winkle.
that this is the debt ceiling kabuki theater. I'm calling it the Moulin Rouge dance, but whatever it may be. Do you just say, we can't control what's happening in D.C. Instead, let's just do our own thing? And what is your own thing?
I would say that exactly.
NASDAQ, only one up.
We're likely to
look at these.
Either Kabuki or the Moulin Rouge. We're likely to see that.
Damn, he might be French.
If every time this happened, you were to buy puts or some sort of insurance to the downside, you'd be broke because this happens all the time. It never goes down other than just, intraday, you get a little jerk here or there, 1%, 2%, and then it flips right back. So I would fade any of the panic that some people feel But the volatility is definitely elevated into this discussion.
Well, elevated.
And speaking on that note, guys, understand what we've been dealing with retail as far as, and I shouldn't say dealing with, volatility is my best friend. I love volatility. That's the only thing where I can get in plays like, and now don't y'all go jump into these yet. We're going to slowly move in that so y'all can understand how I kind of trade these before y'all jump into them. But like I said, everybody's there on boat. But like GETR, these plays, if y'all go up and open up your Webull account early in the morning at 4 o'clock, watch the pre-market movers and watch how many plays bust up 50, 100%, 200%, 500%, right? In a day-to-day span and collapse down and move up and things like that. But that volatility is moving too long terms. And that's what's already letting me know that movement and ebb flow, and understand ebb flow is controlled, is going to be the reason that, or how they're going to explain how you're going to have your Teslas and your Microsofts and your Nvidias and your Amazons blow up. You know, now they move 20, 30, 40, 50 bucks, right? That would be a big move, but there's going to be hundreds and 200s and things like that are coming along these days as this market flips and recovers. Like I said, we're not near that now, which is why it's the best time to be dollar cost averaging, but volatility is coming to the entire stock market, period. So there is no, oh, this is a slow one
right now, but it has had a pretty muscular move lately, right? So are you not buying any insurance at the moment?
No, because number one, it's more expensive insurance. So if you were to buy it, 2 weeks ago would have been the time to buy it. In the last 2 weeks, volatility is up about 14%, which means that policy would cost you a lot more to insure your portfolio. So at this point,
that was a debt ceiling, man, like I said today.
Poorly spent to buy insurance right now.
Ted, you don't often hear John Najarian say he's kind of hands off with the options picture right now. Where are you hands on?
Well, hands-on, Liz, it gets a little boring, but the best trade when you don't know what to do is still cash, and cash is short-term treasuries, money market funds, 5% risk-free. It's a good place to hide while all this uncertainty is around. When you don't know what to do, sometimes the best thing to do is do nothing, and I think 5% in short-term treasuries is pretty cheap insurance.
Well, the 3-month we've got up right now, 5.16%. Right. Let's see if we can put up the 1 month, because to
what
me,
are we talking about here?
That is a big question at this point. I mean, people have to understand something, Teddy. If you are getting a 1 month at 5.5%, which is what it is right now, you have to keep reinvesting it for 12 straight months to get the full 5%. So people, buyer beware, right? Yeah.
See, there you go. Break that down. Appreciate y'all. While everybody keeps throwing up 5%, no, you got to go 12 months over and over and over to get to 5%. Do as you may. And now if you're putting 7 million down, 10 million down, 50 million, y'all, okay, I guess I understand that. But as a retail, why the hell would you play all your money into getting 5% in that year? You might as well just buy some VTII. You'll get a better return than that. That's why I'm just, hey, that's just my opinion. I can't tell you what to do on that.
And that's a little, that becomes a little mechanically problematic.
I'm just not going to be in treasuries.
But certainly it's doable. I think you're better off
lock your money up during a recession,
but there's
during a depression.
That the higher returns are on the shorter term. The further out you go,
what are they using it for?
Treasuries, the lower the return.
Why your money locked up?
But the fact is, it doesn't have to be treasuries, Liz. It can simply be money market funds. A year ago, 6 months ago, folks were getting 0 on their cash. Now they're getting 3, 4, 5%. So there is a viable alternative to risk. And the fact is, the markets in general have done nothing for 12 or 13 months. You take a handful of big tech names, out of the composite and out of the S&P, the market's going nowhere.
Okay.
I mean, it's been
if that is the case, then you would think that big financials would absolutely love this. I'm looking at the majors here: J.P. Morgan, Key, Morgan Stanley,
Amazon, Microsoft, Apple. Guys, I've been screaming the whole time. Go look back on the videos if you don't think it. Listen, I know a little bit what I'm talking about now. This ain't just things I'm ripping off, guys. This stuff just makes sense to me. But I've always been big into finances. But this should be clear as day. You see, AI is our next move. We're going into the Jetsons, cryptocurrency, cars that drive themselves, cars probably be flying themselves, right? Embrace the future. All that past, I just don't even see Don't get me wrong. You don't want to be all fully invested. You want to be have diversification, get you some old realty, but not now. Like I said, I personally feel like the real estate. And we had one of our family members ask this. I personally believe the only sector right now that's even getting close to anywhere near bottoming or getting, where you could start dollar cost averaging is the tech sector, because it's been boomed. It's been smacked, but everything else is just now coming to the reckoning. The housing market, these commercial real estate, where they're coming out now is at its lowest points now, about to get ready to snatch, right? Retail, just because of what's going on outside, people are struggling. It's getting tight outside. So like that, this is the only plausible thing that makes situations, makes sense. AI is coming irregardless. I want to see, all right, so big money's buying what? Tech. Well, then that's where I see it the safest levy to start your dollar cost average. But that's my personal opinion now.
PNC, Wells Fargo, Citi, they're all down today. Not by much, but where, John, do you put the money if you're trying to catch those higher rates out of the Treasury market?
I'd do a little bit of what Warren Buffett did. Warren Buffett shifted his focus a little bit, got out of Bank of New York, got out of U.S. Bancorp, and went for, a little more into Ally, for instance. And I think that's a pretty good play, Liz. And quite frankly, after this big sell-off, Comerica, CMA. I mean, if you're willing to take shots in banks, I think that is a double or a triple within the next 12 months. So I'm buying that. CMA. A triple. Because their earnings growth prior to the bank
but it's a rough ride, John.
Was, yeah, but 4 quarters in a row, they've averaged 40% growth. That's
y'all can play around in that financial sector if you want to,
especially after it's been battered like this. And like I say, Warren Buffett did that. Michael Burry's doing that. Dr. Michael Burry. Yeah. I'm not saying into that exact stock, but they're picking and choosing some of those.
I'm interested in this because, Teddy, Business Insider, which is a great.
So you just shout out your own stock.
They have marked out what Morningstar analysts say are 10 regionals that have absolutely gotten, thrown out the baby bath, whichever it is. I wouldn't know. I threw both out. Comerica, Zions Bank, they like. Go ahead.
Liz, Warren Buffett made all his money in the insurance business, not in the banking business. And the fact is, if you're looking for a place to hide in this environment, I think one of the great sectors to be in is the insurance sector, because I can't think of a sector that benefits more from higher interest rates with all their float. So I kind of would avoid the banks unless it were the big money center banks. And I would
insurance
look at the insurance
is always going to be there.
Let me just say that as you look at insurance, or whether it's the banks, the Federal Reserve, in the past 48 hours, Neil Kashkari of the Minneapolis Fed, now we had Loretta Mester of the Cleveland Fed saying, we're not done yet. We need to raise rates. Just yesterday.
There we go. Now, guys, remember all that talk? They were talking about some holding the stocks. Like, what the hell? Guys, will y'all listen to will y'all listen to Jay Powell? The man said he's going to have to bring more rate hikes. Why is people in the market? Well, all right, it's all good now. We got another one. It's good now.
Jeremy Siegel
there's nothing's
of the
been
Wharton
solved
Business
yet.
School, what he thought about that, and he said that the banking crisis, the regional banking
Put
crisis,
pressure on the margins for us, Jay
some
Powell.
of the work for the Federal Reserve, but they don't quite see it. Here's what he said.
We believe that the tightening caused by this crisis is equivalent to 3 or 4 25 basis point hikes of the Fed. And so they're in dangerous territory of precipitating a recession. I was not in favor of the last 25 basis points. I was very pleased to say that they are likely to pause, but there's still a lot of hawks there on the committee that just want to keep on raising it until they smash the economy.
Yeah.
Is that really what's going to happen?
Reset it.
Smash the economy.
Reset the whole thing.
I hope does not happen, but Professor Siegel is absolutely right. Several of these banks that went under caused consumers to hoard cash, caused consumers to cut back. We saw it in the likes of Home Depot, but that's not the only one. There's many retailers
Apple
that are feeling that pinch, and we're going to see about Walmart, Target, even TJ Maxx. I believe a trade down keeps happening, Liz.
Retail falling.
I think he's exactly right that by those failures,
Amazon
the consumer cut back,
Google
hoarded cash, and is
Tech,
loath
AMD,
to go out and
up.
spend
All right, I'm just
aggressively
telling you.
as they were prior to those.
And I got
things going
something I'm gonna
John
show y'all. I
Najarian,
mean, just so
Teddy
you can clearly see
Weisberg,
how the
traders
movement
on
is in the
Floor Show.
market.
Thank you, gentlemen.
Thank you.
All right. Beautiful clip. Always a good overview of the market. But Lions, let's tap down in our beautiful play of AMC, guys. Look at the debaucherousness here. But here's something crazy, right? So one, just coming up here, I'm about to tie us back into our charts. Days to cover is at 8.84.
Gobble gobble.
What the?
I seen bigger
I
legs
almost
on
thought I
the
was going crazy.
Rude.
I was finna throw the whole mic. I was like, oh, so the computer's haunted. All right. 8.84 days to cover. 25.95%. So we're 5% off from a 26% short interest. So short interest rising. Days to cover rising as we stated last time. Off exchange short volume is down 4%, still 61%. So well over half, 8 percentage away from 70% of the volume being done in the dark pool. So that should tell you point A, point B. But guys, coming back down in here, I've noticed because, like I said, we're I mean, look at this. Literally from when we come out today, we start barcoding basically through halfway through the day, and that's what we've been doing the last couple of days. But I look back and I said, all right, when did we notice this? So I noticed usually from that 10th range to the 12th and 13th, 10th range to 12th and 13th range, right? AMC has been on algo suppression. I wanted to go and double check. I said, all right, boom. If that's the case, let's go double check and see other retail stocks and see if there's something that correlates, right? Our beloved GTI. So here we are on the 11th, where GTI snatched out and ran up 50%, guys. Yes, the 11th. Now look at what happens from the 11th to the 12th. Just devastation. Mullen. And of course, you can go and look at these with all the retail stocks. Whoa. Come on there, Sally. Where we at? Over here? 10th, 11th? Pop. Going through 12, smash down. Guys, they are basically all, or not, I shouldn't say all. Mass majority of the prominent retail plays are all being hit by the same type of algo suppression. They're running on the same algo timeline. The craziest part, though, is the amount of money that is being utilized to push down, not on these plays, but especially AMC. We're coming in over here, guys. Now, just yesterday, they had 2 million shares up there. There's 150,000 shares available, right? And somehow the cost of borrow rate is at 73%. Somebody make this make sense. How are they using more and more of the shares, right? Shares going down. And of course, this is why I'm like, it's blatant. Guys, there's not even shares available. Utilization's at 100%. There's no shares available. But you mean to tell me the borrow fee is going down? Interesting. Here we are up here with our dark pool percentages. Again, 62%, 61%, 67%, 65%, 61%. Interesting. So more dark pool action. The shares are somehow magically appearing, right? But in no correlation to the shares available, and the cost of borrow is going down. Oh, okay. Let's bring it in. Maybe this will make some more sense for us. So guys, looking in here on the 16th, you'll see the puts that have acquired. So Susquehanna has opened up 35 million shares put position today. Now, mind y'all, guys, all this to correlate with what your price action is. This is why I say hold your head on straight. Don't be emotional. You have to look at the facts of the matter. This isn't people selling off. This isn't the stock crashing out. This is blatant market manipulation. It's right in front of your face. Millennium Management, 7 million. This was on the 15th. This was yesterday. As well yesterday. Citadel Advisors, 7 million. Citadel isn't even the big demon no more. Citadel is not even your biggest enemy now. You know your biggest enemy is the person that's supposed to be the bank of AMC. And Terra Capital opens up a put position of 55 million yesterday. Or excuse me, on the 12th. Now, it's ironic to me how you can be supposed to be a provider of money for the same company that you're shorting to sleep. Is that not a conflict of interest and not straight fraudulent activity? And we're able to see it posted on FinTech. You can see this broad daylight. But guys, you're getting hit by hundreds of millions of shares worth of puts that don't exist. How we got hundreds of millions of puts that have just come up in the last 3 days with no shares available, with a float of 500 and what's supposed to be 16 million? Somebody make it make sense to me. Straight up in front of our face. What Drake said, how you gonna lie straight up to my face? All right, listen. But nonetheless, pulling back into our general overview of our market, y'all can see the devastation that's happening in the market, because I was talking about with our family members, kind of like what I saw, and if I expect the market to crash. And I explained to him, yes, I expect the market to crash. Not to $0, but I expect to see a 15 to 20% dip to continue. The housing sector hasn't seen that. Retail sector has not seen the full explosion of what's happened. It's been propped up and levied. But up here, the names that I always scream out: Tesla, Amazon, Google, Nvidia, Microsoft, Apple. Your tech sector are going to be the ones to leave out of this depression first. And they're going to be the ones that I feel like are going to be able to levy the best through this recession anyways. Tech is going to come. You don't necessarily need somebody to come in and bolster tech. Tech is going to be bought by big money irregardless, and there's going to be retail buying into it irregardless. We can't live without technology. You're going to buy that new phone. People are going to take the 4-day plan. What Apple can't come out with the pay now later, or buy now, pay later. We can pay in increments. They are going to be able to have high pricing power. They can make a way for you to be able to buy their product, as opposed to all the other sectors where you have banking sector, things like that, where it's like a direct correlation to what you need to do. Disney, Toast Strudel, Netflix, all that's going out. Telecom services getting smoked. This is a prime exact showing that not only are we feeling this in our AMC stock, but you also understand that the whole entire market is getting smoked and smoldered. I want to just bring that all together so we can have us a quick little overview of what was going on, in my opinion, and what I'm seeing. I'm not losing my head. I'm not losing my wig. Obviously, this is blatant market manipulation, guys. This is not selling off. If there was a sell-off, you would be able to tell a clear sell-off, because it would look like regular price. It would be something that caused it. Sell-off might be when that conversion happened. That might be something that you feel, right? But this right here is nonsensical, guys. We came up, they blown billions of dollars trying to keep us up under $6. We break out, boom. Look at how this price move was now. Mind y'all, it's only been 10 days. Don't feel like we've been in here for 70 years, but literally, look at the price move. Look how what happens. $6. $6. And then they came together. They had matched that queue. We saw when they were coming up, and I was like, why are there 9 million shares? Well, guys, they just spoofed those up here, right? And then that's what they've used to try to drive the price down. But nonetheless, here we are, guys. It's $1 less. They've blown billions of dollars to bring it down $1. This isn't real trading volume. Look at this, guys. This is barcoding. This is barcoding for the max majority of the day. This is clear algo suppression. Look at this. This is our stock moves. This is penny stock movement. This is penny stock movement. Look at this. Barcode, snatch up. Oh, push it down. I'm not falling for it. This hadn't convinced me. And like I said, guys, all of this is irrelevant till June 29th. So, I mean, I'm just not going to be swayed by that. This doesn't faze me. I can clearly put a correlation to what's going on. Long as I can put a correlation to what's going on, I can tell, hey, listen, all right, so we're frauding it up. That's what we're running. We're going to fraud it up. Okay, hey, fraud it up, but that's still not going to help you with this economy. This economy still going to the smokes. It's still going to the ashes. And what happens then, Antara? What happens then when the money seizes up, which has already been seizing up, but I mean fully convulses? There is no, hey, you can play this game, but the fact that they aren't, this is a long ways to go. It's a long ways to go, but the fact that they're smashing off so heavily right now is just letting me know they're in a worse position than what's led on. This would make more sense to be doing as you came up closer to the court case. You're going to smash off, try to do whatever you want now? Is that because you're basically saying, oh, wait, I'm going to push this down as far as I can just so we can try to keep it as it moves up, right? That we can have it at a certain level by that court date? You understand what I'm saying? Like, follow me on this. Smashing it down, let's say $4, right? That'll give them more room for us to run to, right? As we get close to that 29, as opposed to now, if we're going to 6, 7, 8, 9, 10. Now, it's the 15th of a month before what you got to go through. So, I mean, I could already see what they're trying to do with this debauchery. That's why it already tells me, hey, listen, you're smashing it down now like you got nothing to lose. Like, hey, listen, go. Hit. That's already telling me it's showing your weakness. You don't have the ability to let the play move. If the play moves, it gets out of your range, out of your control. You're blowing billions of dollars to push the play down to give yourself a safety blanket. I already know what time it is, but short interest, days to cover still rising, right? The short, a dark pool volume. Hey, take that off that dark pool then. Dark pool, so y'all have to trade more off the dark pool? And you want me to believe that we're in a worse position than we were? Oh, no, guys. Hey, listen. Y'all hold it down. Listen, somebody hit that gym. Y'all keep your head on straight. I want to come in, obviously, like we always going to do. Bring in the facts of the matter. But understand, guys, this is the beginning of our retail saga. And especially on this channel, understand, this is not just about AMC. This is about retail. Same with what I was talking to one of our family members, where he was like, hey, don't just get caught up in AMC. Hey, listen, we're not just caught up in AMC. At least I'm not. That's why every single day, we don't even just start off our talks about AMC. We go into our market overviews before we even go into stocks. And as we spill off into more stocks, there's going to be more discussions. But right now, this is where the mass majority of us are, and the mass majority of where we came in at. So this is why we're talking about AMC right now. And because we need to figure out an end to this chapter before we open up the next chapter. And it's just that simple. Y'all hold it down. Don't freak out. Don't FUD out. Don't get, Go buy you some Apple. Go buy you some NVIDIA. Have you something on the side to where it allows you to have that balance where you're like, all right, good. This over here is rolling while we're trying to finesse over here. You got to have both those running. This is what investing is. Investing should really be called hedging. I'm a hedger, right? You're a day hedger. You're a month hedger. You're a long-term hedger. You're a short-term hedger. We're hedging against what's outside because I like to be inside. You hear me? Hey, y'all hold it down. Yes, sir.